We welcome Lewis Bateman to the show today, the Spirit Blockchain Capital podcast pitch. Lewis, welcome to the show.
Paul, thank you very much. I'm very excited to obviously share our story. I'm excited about the thought of where we are today, and I'm also very excited about where we've come over this past year.
Excellent. We're going to start today with a little bit of vision and market trends. We're going to talk a little bit about the SBC offering. We're going to kick this off with a very simple question. What is your experience with capital markets in relation to the story to get here?
Well, I've been in capital markets and capital formation for over 25 years. Started my career at a very large bulge bracket firm and an international bulge bracket firm in New York City. Spent a number of years there, moved back to Canada, did a bunch of different roles and responsibilities, but ultimately we sold a business and that business got acquired by a Canadian bank. I moved to the Canadian largest exchange, helped them on their capital markets division, leading their international participating members. And in that time I was there, I was given the opportunity to manage what was relatively new, which was their structured products relationships. And these were closed-end funds and ETFs. And it really excited me, the thought of this new investment structure. And it brought me to a relationship and really kicked off my entrepreneurial spirit, where I joined one of the leading independent ETF companies. And it was built out over a number of years by what I consider one of the great founders of the space. And it was sold. I left that business, and it really brought me to my own personal opportunities of creating my own ETF company. And in that time, I was fortunate enough to really start soaking up the blockchain space, specifically into cryptocurrencies and Bitcoin and this new thing called Ethereum. And I was asked to raise some capital for the Ethereum project. And we obviously were early adopters of the Ethereum project. And that led me to acquiring Ethereum, which led me to a relationship at one of the very first exchanges in Canada. And I was able to join an exchange that was being built out and help them in that process of being fully regulated in Canada. I left there and went to a very large U.S. company that was listed in Canada. I became their CSO and helped them in all of their endeavors from a business perspective, acquiring businesses, their strategy, and ultimately their international release of some businesses. That business ended last year, and I took all that kind of knowledge and experience, and I had the opportune moment in September of last year to start talking to the founder of Spirit Blockchain, and saw this wonderful opportunity of possibly joining them and giving my leadership skills. And the founder stepped down as the CEO, and I took over as CEO, really gut checked the business and the opportunity, and spent the better part of the last year of putting together what I think is a very unique structure. And the uniqueness of the structure is we have a public listed holding company that is an investment corporation. We own and operate a underlying operational organization out of Zug, Switzerland. And we have an underlying asset management division that we are developing and resourcing so that we can ultimately not only be the technology provider, and we have a partnership with EOS Foundation, but we also have acquired a business called Troon Technologies. And in that collaborative effort, we are able to ultimately, with our registrations and our knowledge, move into the tokenized fund space. And I think we are at the precipice of a real monumental change in the market, from asset management, digital asset management, And I think we are looking forward to us being a leader as a public company in providing real thought out solutions, real transparency, and real understanding of the regulatory requirements for delivering what I would call sound RWA, or real world asset delivery through a protocol mechanism.
Thank you. So knowing that I know a little bit about your past, one of the things that I like that you say oftentimes is you understand the buy side, sell side, and structured product side. Maybe if you can just describe that with Merrill Lynch, your experience in the security markets, and then the structured product.
Yep.
If you don't mind.
Yeah. So I've had a good fortune of really living at a very senior level in all three kind of deemed classifications of how capital formation is done. And so, I've created an asset manager business. I've been a participant at a senior executive level at the Canadian largest exchange. I've worked in a bulge bracket firm from a brokerage perspective as a trader, and all of those really have given me an understanding that this market is changing dramatically, and there's being a real understanding that those siloed businesses or those siloed areas of influence are really coming together under one core deliverable through the blockchain. And I think we have a real advantage with our team, the experienced team that we've hired, my experienced partners in the business, to really bring that expertise and that advisory of how to really systematize the transferring of that wealth creation or that capital markets liquidity and execution value, all under one domain through Spirit Blockchain Capital.
Fantastic. And then that evolution, and I've heard you say this many times, from the mutual fund to the Satoshi paper and everything in between, from the ETFs and stuff. Can you just talk a little bit about the evolution of that and just get right to the paper?
Look, I think this is an evolution, and I actually think it's a bit of a revolution in the fact that you, for a better part of 30 years now, have had a delivery mechanism in the ETF formation that basically democratized all asset classes under an equity wrapper. And if you read the Satoshi paper, or any white paper, let's be very clear, they're very similar to what would be a prospectus, not from a legal documentation perspective, but just as to what the application is trying to do. And I think, there's a lot of similarities to what an ETF is and what the blockchain and specifically cryptocurrencies can do that are very similar to the ETF. And you're seeing very large asset managers, the largest asset manager, seeing that opportunity as well. And we are going to achieve that as well. We are looking to take our knowledge as traditional financial expertise and bring that knowledge into the digital space under the same regulatory understandings that we've had traditionally, but also find the solutions that are actually more streamlined, more economical from a scalability perspective, and really giving good governance in the smart contracts that we are devising out in the product offerings themselves.
Awesome. Thank you. Let's talk a little bit about the mid-office and back-office savings and why Larry Fink is coming out so aggressively with some of his statements. And I would say we probably thought it was going to happen later this year, and all of a sudden to start the year, it's like, bam, he's on stage, he's talking about assetization, he's talking about tokenization. Is it because of the mid-office and the back office? Is that, inevitably, is that the problem to the solution, or is that the solution that presents itself right now?
I think there's a bunch of things that are happening in this space. And obviously there's an opportunity for people to become sovereign in their own asset holdings, right? You have a digital wallet that is available to every single human if they elect to take on a digital wallet. And that gives a sovereignty to the persons holding their assets. As we start digitizing more and more of the accounts, more and more of the assets that you're holding under your records, whether it be real estate, whether it be traditional fiat currencies and in the stable coin form, whether it be real world assets like the assets that we've seen most recently in Panama, whether it be precious metals like gold. We're talking to precious metals players, all of these things, as Larry has said and others have said, is that they can be tokenized. And that deliverable mechanism streamlines a lot of inefficiencies in the traditional finance world because you don't have the necessary need for a trust agent or escrows. The smart contracts have a governance behind it, so it lowers the cost from a legal perspective. Auditability is there. It's more assured because you can track and follow where the movement of those assets go. And I think all of that borns out a real opportunity for people as a whole. And I think you're going to see more and more adoption coming in. I think there's still much of a learning curve to still happen. I think we're going to be big advocates on learning, breaking down the perception or the barriers, which are, cryptocurrency's a scam, or there's more fraud in that area, or all of those things I think still need to be understood, because I think it's a misnomer that these things have this negative connotation. If you use them properly and the right formation, and if you have the right KYC and AML processes, you have the right governance in the protocols themselves, you ultimately can have a very successful way of transferring peer-to-peer or through central exchanges wealth.
Yep.
And I think also a lot has changed just in the last few years with COVID and people working from home, and people working from multiple jurisdictions. We have an office, right? We have multiple offices around the world. We're all cumulatively using cloud-based computing for, doing our work. We're a lot more remote, and that requires us to be really fungible anywhere. And I think the blockchain allows that fungibility and that access, that it doesn't limit us by borders anymore. I repeat this all the time, that banking is going to go borderless.
Yep.
Capital markets is going to go 24/7. Marketplaces, just as what has happened in the blockchain space from a trading perspective. It's not going to be a 9:30 to 4, regionality of trade. And I think all of these are happening not in a 20-year horizon, but in the next few years. I think Metcalfe's law of computing is really in the effects of where this business is going to go.
That's well said. And you have a really interesting investment thesis at 3 different levels. I really like when you break this down, because when we get to it, and I kind of want you to maybe start with the underpinning technology that you have right now, because I think a lot of people don't understand that layer. But you've been acquiring, places on the monopoly board, which I think is, really wise. But it's hard to communicate to that to people, or underpinning the blockchain technology to the licenses to offer these assets out. So let's start to maybe just with the companies that you've already invested into and why. And then let's talk about that investment thesis from a public standpoint, from an AG standpoint, and from an asset management standpoint as well.
I mean, I've spent a number of years in the asset management space, and I think there's some fundamental areas that can be improved, and specifically in the private equity market space and the VC market space. And what happens is, typically in the private equity and market venture space, is you allocate capital to a fund. That capital gets locked up anywhere between 3 to 10 years. They go out and apply that capital to a multitude of businesses that they have a strength of knowledge in. They hopefully find a bunch of burgeoning companies or profitable businesses that have cash flows and all the different things that, PE and venture company styles would be having. The problem with that in the blockchain space is that this market is very different than the traditional allocating capital. It doesn't have that length of stay, and it doesn't have that kind of CAC rate of applying more capital to get to the certain size or scalability where there's a chasm point where they finally make a profitability. You have computational power, right? You have halving of crypto assets. You have ecosystems that have to be cultivated, and you have to have great community. All of those things, you then actually are in a volatile marketplace.
Yep.
And that volatility changes dramatically in a very short period of time. If you know that the halving is every 4 to 5 years, that life cycle changes dramatically in those 4 to 5 years. And I think having a public entity that allows for you to have liquidity on your investment, so the very top company that we have allows for us to buy and sell the stock on a secondary market. If you are a accredited investor or someone that wants to talk to us directly, and we are looking for more capital to deploy into our investments, we open up our market and our business, and we will allow for a private placement to be happening. That allows for our operating company to deploy capital to companies that we really think are next generation, thoughtful businesses that are really the infrastructure of the blockchain space. We are not a company that just holds esoteric crypto assets on the basis that they might have a high rate of return. We're buying companies that we feel are actually the glue, the picks and mortars of the blockchain space. And what do those businesses do? Those businesses are asset allocators to the proper kind of qualifying liquidity of those underlying assets. That's like alt fins. You have rewards programs and staking programs and ways that your money can make money. And that's through like coin change. You have companies like Investify that help you hedge and understand your positional play in the market, and they will give you a structured note. These businesses are kind of the foundational aspects for anyone that's looking to participate in the space and safeguard a diversified portfolio. And we think having that as a base concentration of investments with other things that are coming on, we will build enough of a resource relationship with these companies where we're taking their strength, their scalability, aggregating that under one application where Troon Technologies is going to develop that out, and that Troon Technologies will offer that under Spirit's app, Spirit Link, and really give the opportunity for people at the top of the funnel, who are investors in us that want to use our application, can use the application of the services, get involved in the services that we have, and ultimately, once they see the success and the transparency and the trust that we're delivering on that application, I think they ultimately will ask us to, manage their monies and utilize the token offerings that we look to create in the future. And it really becomes a self-fulfilling prophecy that we have a brand and a utilization which ultimately hasn't happened in this space. And I think we can do that in a way that we're not just looking after the crypto community or the digital community, but broadening it out to a traditional finance community that is trying to find new ways and new ways to materially gain performance under their own wealth accumulation.
Yeah, I would agree with that. And I think I like the idea of being able to invest publicly through the company. I think it's reducing risk. It's diversification. It's really easy for people to get in. We know we need a lot of broker knowledge out there. We've had some recent stats. 52% of brokers in North America are invested in Bitcoin or digital assets, but they don't know how to explain that out. So it's a bit of that's chicken and an egg, but you can come into Spirit on a public, on a public investment, no problem. You get underlying value there. At the second level, the private placement level, see some of the companies you're investing in. They can obviously come in and make an investment directly into them, into those companies. And then at the asset level, I think that's really the stuff that Larry's talking about as well, that he's focused on assets under management, the assetization, the digitization of that. So a minute ago, you mentioned and talked about the Spirit Link app. Over this past week, we've had some people ask, why is it different than a traditional app in the space that gets offered out through Franklin or whoever else? You had a great response to that, and I think it was a response that for two very experienced people in the finance industry, I think they got it. And I was wondering if you could just reiterate what that difference is with the Spirit Link app, that value versus, just traditional, hey, they said we can do that today. And I think you brought them down a whole different means of sovereignty, but also the value that's proposed in the bigger picture.
So I think fundamentally creating a super app will help twofold. One, our investor base, because we are obviously championing the businesses that we've invested in, and we're aggregating their APIs to us. And we think it's better to have them power our underlying service, right? And secondly, I think from a development cycle perspective, the fact that these companies have been around for a period of time, they're not testing with us, we're not testing outwardly, gives us an advantage, right?
Yeah.
And I think the advantage is that we get the best of their core strengths, and we can offer that out to our relationships, our investors, our clients in a very systematic way. And I think ultimately the client will get a better customer service level, a better service offering, and a more immediate service offering. If you think about a financial institution, there's a lot of bureaucracy. There's a lot of risk that they have to worry about for their clients.
Right.
And I think what we can do for not only them, but even for our own clients is advance the conversations and the build out at a much more immediate structure.
Yep.
And I think that's a real defining moment because there's such an immediate need. There are 1 billion plus people that are unbanked right now.
Yep.
There are millions of people that are holding digital wallets and have no real use case for the assets that they're holding. And I think I'm proposing the idea that they can bring those assets to us or even traditional fiat and get a greater exposure with properly defined skill sets in those underlying businesses.
Yep.
And, you know, you're right. We did talk to a couple of financial institutions. Well, we can build all these things. Okay, great. How long is that going to take? How is that clearly defined? What is the process you're going to be building from? Who is your end client going to be? And I don't think they have done that full discovery. And that takes a lot of time.
Yep.
A lot of time, money, and effort.
Yeah.
Why wouldn't it be better to partner with us or work with the community at large and saying, here's a better delivery mechanism on an immediate basis?
Yeah.
And I think we're having very positive conversations right now with several financial institutions. We're even having conversations with other asset managers because they want to have a diversified offering set where they can still offer an ETP or an ETF, but we can tokenize those funds for that, right? That's not their skill set. Their skill set is driving an index, driving the performance of the underlying fund.
Yep.
Their business is not figuring out which is the best protocol to utilize for those services, which is the best way to have a primary marketplace for those underlying clients. And we're able to do that.
I think a lot of people struggle with the custody and non-custodial services to custody services and the insurance. And I wonder if you can explain a little bit about the difference in insurance. You went through that yesterday between some of the traditional firms that are out there and the value proposition of it being done correctly.
So all the regulators are looking at the custodial aspects of the digital asset space. Mm-hmm. There are several digital asset providers that are custodial relationships. For the most part, the insurance policy is on the overall policy of the company that's holding those digital assets, not on the funds directly in themselves. There's a heavy premium for that effort, and there's a lot of insurance Lloyd's of London that have not looked at doing that coverage because A, they may not have the general knowledge, or B, they don't have a general understanding of what the security of those assets under that domain is. And I think we will come to the market with something that we've been working with for the better part of the last little while, where the underlying assets will have its actual own security, its own insurance to the assets for the unit holder. And I think that will be a key differential than what is out there from some of the larger custodial players that are holding assets right now. The other side that everyone talks about is SOC 2, right? SOC 2 is a requirement from an accounting perspective, from a policy perspective, and just from an understanding that there's good governance in the processing of the funds through the whole transmission.
Yep.
And you know all the steps, and you follow those steps, succinctly, And I think there's lots of custodial firms that act or describe themselves as financial technology, but the liability is laid off to the person. And that's a very scary thought, because we're entrusting you as you're acting and smelling like a custody, but you're telling everyone that you're actually just a technology firm, and you're laying off the liability to everyone else. And to me, that's very problematic.
Yeah.
And I think regulators are looking at that. I think clients themselves are getting a little jaded on that misguidance.
Yep.
And I think we have the opportunity under our public entity with our regulated relationships and the development skill sets of Troon Technologies and the partnered firms that we're dealing with, that we can come to market with something that would be more succinct to what the actual client demands are.
And I know it's not sexy, but it is absolutely necessary, especially when we start getting traditional brokerage firms involved, to know that there's that comfort level there to deal with the Spirit ecosystem. I think that's a game changer. And it's a tough thing to understand just as you just walk into this space as a broker, and they're not able to really truly explain Bitcoin fully at the moment. And we don't have to even bring that up. It's just traditional insurance.
I'll be very honest with you. I don't want clients to feel that they're touching the blockchain.
Right.
I want them to feel comfortable that they're dealing with a public company that's, has its full audits done on a regular basis, that we are following the guidelines of those local jurisdictions, that we are reporting appropriately and efficiently, that we have strong management and strong management skill sets, that we believe in our own personal reputations and personal reputational risk, that we're doing the right things for the end client user. To me, that's fundamental. The other side is, I think, ultimately, we as advocates to the space have to live a different standard. We need to change the macro of what is perceived. And I think we're going to be able to do that. This company of Spirit Blockchain is not a new company. It's been around for a few years. It's a new public company, right? We've only been around since September of last year, the year before. It's a fast period of time. But I think what we're going to be able to do is people can pull up our prospectus. People can pull up our financial statements. People can talk to us directly. We are open, direct. We can give fair understanding of what we're doing, fair understanding of what the marketplace is doing. We know what we know, and we're confident in what we can deliver. And there's not many public companies that have the abilities that we do. There's not many public companies that are listed like the way we are. There's not many companies that have the understanding of how to deliver a reporting issuer, operating issuer, or operating company, and an asset management division. And I think that's a very unique structure that is really needed, because the way that you can invest into this digital market space or digital asset space is either you're getting your own wallet, you're going on to a decentralized exchange or even a centralized exchange, you're running fiat through a traditional bank, they convert that to a stable coin, you buy whatever crypto asset that you want, and you hold it for hopefully a gainful return. I don't think that's necessarily a long-standing business. It's just going to be a transactional business, and it's going to be a zero-sum fee game, right? Who can offer the lowest fee? Who can offer the fastest transaction? Who can offer? And to me, I think we need to build an ecosystem that services the client not only on holding those assets, but giving them proper portfolio allocation, giving them a real use case, right, of their assets. And I think we're going to do that over the next 3 to 5 years.
I would agree with you. And I think this is the evolution of crypto, blockchain that we're seeing go on right now. A different experience set coming in. A lot of young people have really pushed this industry forward for us, right? All these protocols that are out there, these great minds are working, but perhaps what was lacking, well, not perhaps, we know what was lacking. And this is the chess pieces to the board, or the next building blocks to financial digital assets, the assetization, and it really requires those things to issue out properly for remove any risk and I guess for any consumers at the consumer level, so that they know that they're protected. I want to go back to a building block, and you mentioned it a second ago. It was the crypto prospectus. Can you just talk a little bit about your crypto prospectus?
Well, it's not a crypto prospectus. Let's be very clear. It's a public prospectus that is filed with a securities regulator, which describes what we do as a business and what we can do and what we won't do. Right. So that's a very different thing than a crypto white paper.
Got it.
Right? What I would say to you is, in that filing, it gives us a lot of flexibility and understanding of what we can deliver to our end user. And it gives us a lot of opportunities that we can be an active participant in the development of the blockchain space. And we're super excited to be working with the likes of EOS, right? They contributed assets to us, not in a traditional form, but their own underlying crypto asset of EOS as they structure for financing.
Yep.
That's a very unique opportunity.
Sure is.
That has never been done to my knowledge. And I think we're trying to be at the forefront of change, but not at the detriment or at the greed of the market.
Yeah.
And I'm really a massive advocate of trying to do things in the rightful way, trying to do things in a systematic way. We're not taking giant steps and saying we're going to be everything to everyone on day one. We're taking very strategic. It's taken us a year to get to this point. It will take us another year to get to the next point. It will take us another year to get to the next point. But that compounding effect of doing the right thing time and time again will build a community with us, a level of trust with us, and an outcome that I think everyone who utilizes our services, who is an investor with our public offering, will be very happy. And I think that was the problem we're trying to solve. And I think we're going to solve it in a very clearly defined way.
We talk about trust all day long because the industry desperately needs it. You've mentioned, we've got a bit of a runway and a moat in place. Could we talk a little bit about that? Because you've spent this last year plus and all of your previous experience understanding how to position Spirit and what that moat might mean, for Spirit as a company.
Look, I think it's a very hard, arduous process to become a public company. Regulators have a fundamental fiduciary responsibility to protect the investor, and specifically the retail investor. And I think they do an incredible job on a daily basis to try and do that, and it's a very hard job. I talk to regulators all the time, and they don't get the respect that they do. They look like they're the cops of this system.
Very true.
And the reality is that they're trying to do best to retail investors. And my mind is that we have an opportunity right now that we have an ability to kind of deliver out an experience under the mandate that we have. There aren't many of us that are listed in the formation that we have. There are not many that are actually global in nature. The fact that we have multiple locations, and we're expanding our business even today in Panama. And I think we are fortunate that we can do this in a very efficient way too. We're not some big monolithic bureaucratic financial institution. We can be as nimble and as agile as possible. And the other side I would just say is, for all the registrations that we have and accounting and all that, we've complemented that with the technology development side. We're not just one thing. We are actually an organic, a financial institution or financial investment corporation, but with a technology group that is developing and resourcing that on a daily basis.
I think that's really important because I feel like it's a Rubik's Cube. You see a lot of these applications that are partnering with people who say they got licenses and they do, they don't. in your case, you've got all of that in place, plus the knowledge to deliver it out, and you seem to have it in a nice, seamless process where we watch these other platforms and it's still not seamless. They don't have all the pieces to really offer that out for traditional people to enter into the market and feel like they can get into the market with trust and confidence. And I think, you don't really, do you want to comment on that? You can.
No, I think we do have an opportunity, and I'm a massive advocate of giving education. When I started in the ETF space, half my time was explaining what an ETF does or how it's done.
Yeah.
This is the new evolution. Where now we have to explain what digital assets and the protocols that they're being serviced under do. We spent time a couple of days ago with a real estate developer, and all he asked for was a one-on-one, education of what the difference is between traditional finance and digital finance.
Yeah.
And I'm happy to do that. Don't be embarrassed to ask those questions. Those questions need to be asked and they need to be answered. And I think we can do it in a very rightful way because we have the experience from traditional finance and we're bringing that knowledge to this new digital world. And we're not taking away or absconding the rule sets that were already in place. We actually are trying to collaborate with those rule sets and trying to bring out efficiencies in those rule sets.
Yeah. And the trends in this upcoming year, where do you see the trends and how do you forecast what's about to happen in the industry, say over the next year and a half?
Yeah, so I think there's going to be obviously a greater push of more ETFs that are digital asset-based spot market stuff. I think we're all seeing that right now.
Yeah.
But it's going to evolve to other digital assets. It's not going to just be Bitcoin. We're obviously hearing about Ethereum, and I think there's the top 10 of those underlying digital assets are going to all be an ETP. I think what also you're going to see is more and more people actually just looking into the space and trying to figure out how do they kind of become part of the community. And
Maybe a bit of FOMO?
Yeah, there might be a little bit more FOMO for sure. I think it's momentum driven, right?
Yeah.
But I also think there's going to be a lot of large financial institutions that are finally going to start dipping their toes with either some form of advisory, some form of offerings, and I think we can be a participant in that. And I think the other side that we're going to spend a lot of time in, and you're going to see a lot of people starting talking about, is just the governance of decentralization of exchanges. There's lots of centralized exchanges that they've spent a lot of time in the last few years on. The real question is, how do we work with these decentralized exchanges, and who are the operators? How are they operated? How is it? And I think that's going to be how they're structured. And I think we can be helpful in that process because we're never going to be an exchange. Right. We are an asset allocator. We use the formation of tokenization to allocate capital. And I think that's a very different conversation than buying and selling of an asset.
You're not rushing to an exchange. We're trying to set...
No, we're trying to give foundational applications and the ability to diversify your portfolio through real-world assets and different formations of investment structures.
And I think the overall timing...
Good. Yeah, I think everyone is looking at a now moment. Do I think it's all going to happen tomorrow? No, but it's a process, and we have enough capital and enough wherewithal to withstand this for the next few years.
And that's the bull in the china shop. Paul Harvey, good day.